It happens 4 times every year, and that is earnings season for corporations. We are just starting, or we just started earnings season last week for the third quarter of 2018, and like I like to do every single earnings season or heading into earnings season, I'd like to just quickly let people know that it's a very low probability game to place trades, and I mean trades, not long-term investments, trades ahead of any company's earnings report in the hopes of getting the immediate reaction after that correctly. I can tell you I've seen anything in every possible scenario out there, good reports, good outlook, stock rallies. Same thing, same scenario, but the stock then goes lower. Bad outlook, bad earnings, whatever, major rally or major sell-off, or stocks that have a huge rally initially and then the next morning drop, 15%. And we've seen anything and everything. So I think the immediate term game, and this is my own proprietary, my own sort of testing and just looking at this for many, many, many years, I think the odds are about 40%. So ultimately, it's a losing strategy. But one strategy that works very well is to wait for any given company's earnings report to come out and then look for opportunities there. So especially now when it comes to technology stocks, they are really still in the hot seat in terms of the immediate term. But I do think there's a good chance of a lot of these stocks getting chased by underperforming fund managers at some point in year end. And I say at some point because I don't know. I think the earnings first have to clear. And so I'm just going to give you a couple of examples, a couple of stocks out there like Netflix and PayPal, which everyone knows. And I actually think these stocks could rally, although, in the immediate term lens, it might be a little more difficult. But I think into year end, there's a chance that these stocks, particularly PayPal, could rally. So I just want to give you a quick example of what this looks like. So let's start off with Netflix real quick. This obviously is a real cult stock at the moment. And you can see the stock is right at that red line. This line, that's your 200-day moving average. So what I'm looking for in this situation is once the company has reported its earnings, which are actually going to happen today after the close on Tuesday, October 16th, we want to give this at least a few hours on the next day to trade. What I'd love to see, and again, it's just one potential scenario, what I'd love to see is a positive reaction in a stock, like a rally, but then it closing on the 17th of October at the very lows of the trading day. That would tell us that there's a lot of overhead supply up here that the stock should be going lower. That actually is kind of what I'm thinking might be the likeliest path of least resistance maybe to the downside. Alternatively, if the stock after earnings were to just drop flat out, I think it's at risk of getting near-term oversold, in which case there are strategies, particularly using options, that one could kind of place, sell a bull put spread is what it's called, to make some money. If we look at something like PayPal, on the other hand, then again, I don't know what the immediate reaction after earnings is, that's the point, but we want to react to that, right? So if you look at PayPal here, finally mean reverting, breaking all its moving averages, but I would say something like this: if this stock were to wash out a lot more after earnings, which would be my preferred scenario, if it were to come, say, down here, this in my mind would be an opportunity to maybe buy the stock or sell some put spreads, or maybe buy some calls. So the specific situation, well, the trade setup in each situation can be different, but I think the key here is to look for, particularly if there's a big move after earnings or one that's technically very sound or breaking a chart, there's a lot of opportunity there, and you can then either go with that move. So let's say a stock rallies out and finds a lot of support after earnings and rallies, you can either then go with that, or if you think it's overbought already, then you can go and fade that. There's a lot of things that do in very high probability trades. We will be sharing these with our members in real time, certainly, and sending out trade alerts and all that stuff that we do every single earnings season. So I hope this is helpful, folks. Have a great day. I'll talk to you tomorrow.